Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook and your host for about the next 23 minutes here on Options Guide TV. We should start taking the over-under on how accurate I am on the length of the show. I think I'm going to always lean towards the over, but it does depend. If you are willing to participate in my reindeer games, the chat box is opened up. Feel free to ask any questions via that chat box. We have a plethora of earnings that are coming this week. We have stocks like Google that's going to be announcing, good old Alphabet in this day and age. We got Amazon on Thursday. What else do we have here that's kicking off? Netflix kicked off last week, and that's usually the start to the Meta. Meta's announcing after the close on Wednesday. Tomorrow we have Visa, and I kind of like to trade Visa because it's a fairly expensive stock. We kind of see a little bit of a wedge pattern that's happening, so looking for a fairly strong potential breakout. We're going to lean to the upside. We're going to just kind of go right along with the markets. Once again, the markets just seem to tread a little bit higher, even though the government can't seem to open up. So interesting enough, eventually that's got to take hold in some way, shape, or form. This is what I kind of think about the markets and the situation in I guess in the government is basically that it's just a tinder that is just ready to potentially explode if we get any bad news that can tip the market. And that does make me nervous. The VIX has finally given up and said, okay, we're going to adhere to the actual volatility of the marketplace. And we see the VIX down around the 16 level again. So that, I guess it is in general, but it just shows the complacency in the marketplace right now. We have Newmont Mining announced earnings, solid earnings, beat on both top and bottom line. But they did indicate that they're not pulling as much gold out of their mines as they forecasted. So they got beat up. And it was that simple. Real strong earnings. And that's, going into their earnings report, assume that would be the case because you have all these minerals that they are mining for, and they're all at all-time highs. So even if gold does come off a little bit, like we've seen recently, they're still near all-time highs, and they're still making it worth their while to mine those minerals. But the stock got beat up. So we looked at doubling down on Newmont. So let's run and look at the chart here. And so here's the climb up that kind of goes hand in hand with the price of gold. And we get all the way up here, and now we've had a breakdown below the 20-day moving average and now below the 50-day moving average. We were quite a bit extended, and this is one of the reasons in gold that we decided to get bearish on gold. But I don't like where this chart is at. I don't like where the next stopping point is. Actually, if you just look at the moving averages, you could come all the way back to here, but there's no real defined area on the downside where I think the underlying could go to. I'd probably just close out the trades right now. Now, we did a limited risk trade. The second trade that we set up was a open wing butterfly, and I kind of like this is a trade that we looked at on Friday with the stock at 85.46. We put together an 80, 85, and then stopped short on the 87. We paid $2.20 for that, but we're going out to the November 11th expiration. So when I put these trades on a lot, you have limited and known risk when you're first putting on the trade because we are doing them cheaper than a long call spread. So if you want to manage them, and I do feel that with long call spreads or this is an alternative to a long call spread, which would be an open wing butterfly. If you're down 50% and you want to get out, feel free to manage that position. And that's about where we're going to be at right now. Now, it's been a while since we've actually had a trade that has gone against us hard quickly. And that's literally what just happened. So, November 11th, 11 days away, bought the 80, sell 2 of the 85s, and then bought the 87. Okay, after their earnings announcement. So it's 127 right now, 230. So you're talking about 150. Yes, 115 would be your out point. I do think it would come back. So if you say 50% of $2, well, it was $2.20. We're that would be $1.10. We're at $1.27 on the trade, but I really don't like the way the charts are. And it's mainly it just flew through that 50-day moving average. It didn't even pause. And we're hanging out at 77. And then let's take a quick peek at gold. Gold looks fairly similar. It almost looks like the exact same chart, but gold is a little bit more stable. Like once again, we see the 50-day and the 20-day. We're a little bit less extended relative to the 200-day moving average, but we're still quite a bit above the 50-day moving average here on gold. Yeah, Newmont is a little bit, I just don't like this movement that happened this morning. And like I said, real strong revenues, a beat on both the top and bottom line. So I will continue to look at the trade. We have 11 days left. We'll come back on Wednesday and we'll take a peek to see if it finds a rock to bounce off on the downside. But at this point, if you put the trade on Friday and we're down to 120 here, I would look to get out. Now, here's the thing about an 11-day option trade and the fact that we sold these 2 85 strike options that have a lot of premium in it is this time premium right now is saving you, right? We are down. We can the fact that we received a decent amount of time premium on this option contract. This 80 strike is got something in it. This 87 strike still has something in it. So every day that we go towards that 11 days in expiration, theta is going to be big. It's going to hurt us because all of these option contracts are out of the money and they're going to decay fairly rapidly, and it's going to be exponential as expiration approaches. So we'll put it on for 220 and it's trading right around 110. I would think about getting out. We're at 127 right now. So you can give it a little bit of room to run, but I think I'd get out of the trade. I'm not happy about it because I do think that Newmont's getting a little bit too beaten up for such a good earnings report, I guess. Relative to, I guess, to the extraneous news, I do think that it will come back and that you're trying to catch a falling knife, but we're dealing with 11 days. So that's the way I look at it. Good morning to you, Kurt. Okay, let's look at Visa. Here's Visa right now. They're announcing after the close tomorrow. Always like to listen to Visa because you get a lot, especially in this day and age with the government shutdown, not getting as much data. Visa gives you an insight into the consumer, debt levels, everything. They're always just a very interesting earnings report to listen to. And they're announcing Tuesday after the close, I'm going to go out to the November 11th expiration. We're going to look at doing another one of our butterflies, and I don't mind this trade. Let me run into the chart. Visa looks like it's kind of developing a wedge pattern. V, not in that. Let's look at this whole period of consolidation, and we got the 20-day, the 200-day, everything just hanging right here. So if you're to draw some lines, come from down here, come from up here, we're basically saying that Visa really wants to go somewhere and it can't decide where it wants to go. If it wasn't earnings, this would actually be an okay place to buy a long straddle, right? To buy the at the money call, buy the at the money put, and just see where it goes. I don't want to do that around earnings. I never like straddles when there's a known event and the volatility is obviously priced in. Those are hard trades to win time and time again. But I'm going to lean to the upside. Stock has made the breakdown to the lower end of the channel. Now it's hanging where everything is. And I guess we can zoom in on that too. We're hanging right on the 200, the 50, the 20-day, everything right here. And it's kind of, well, we got 3 days in a row where we came down and tested that area, and now we're bouncing back up. So let's lean into it. Let's lean into it with the earnings trade. And we're going to look at a couple more earnings trade at the end of the week. We obviously, as always, Amazon's announcing earnings on a Thursday. That means that you have a 0 DTE option on Friday after the announcement, an option that will live just for that one day. And we will look at a couple of those trades. But heading into Wednesday, let's have something to talk about. So let's go in and look at the what if calculator. Here is the trade that I have set up on Visa. And yeah, it gives you a fairly decent reward to the upside. So we're going to sell that at the money premium. We're a couple of points. We're at the, this is one. I need this to go to here. 347.50, and we're at 348. So it has drifted higher just a little bit. 330 is the cost, which puts our break even at 343.30, and that's where we cross right here. So if the market stays where it's at, we're good after earnings. The market creeps on up, the maximum that we could make on the trade would be 170, which is $5 minus that premium received. And how do we get to the $5? Here's the difference in the strikes, 340 to 347.50. That is $7.50. And then we stopped short on the standard butterfly, and we went 2.5 points. So that is what that's what's working against us. That's what our short spread is. And so net, that means that you have 7.5 minus 2.5, $5. Anywhere above 350, this has to trade for $5. We paid $3.30 for this trade. So we are looking at $1.70. We need it if it stays or drifts higher. 343 is where our break even is at. Below that, we are out of the trade. So bottom line is if the market opens up and it opens in this range down by the 340 level, notice how the profit and loss graph looks right now. We could still have something to sell, kind of like with Newmont Mining. So I would look to get out of the trade if it leans bearish after the earnings report. On the upside, though, if the market rallies, there's no real reason to get out right away, because if the market starts coming back down and say it closes close to where it opened at, if that were to happen, get a whipsaw to the upside, you could still do very well if it lands right here. The maximum that you can make on the trade, if you get right at the 347.50, is looking right here with my cursor, about 415 for the trade. Yeah, we'll say 415.50, $415.50. But I like these trades in that if the market does go up, you're great. But if the market comes back, you got this little buffer that you can actually make a little bit more money, especially if you're managing your expiration and you're looking at the November 11th expiration here. That's the way I would approach it. Any questions on the Visa trade? All right. Well, I put the over under at 21 minutes. We're at 11, 20, 32. What did I say? 22 minutes. So we're a little bit on the under as far as the show is concerned. If we don't have any questions, we're just going to call it today. We're going to look at the Visa trade. That's what we're going to ride. Newmont Mining, let's officially say let's get out of that trade. Market's down, got cut in half on it. we still got a little bit of time premium. The time premium in the option contracts is our friend now. It is helping us not lose the entire investment. So boom, we're going to get out of that trade. And then we have Wednesday after the close, we have Alphabet / Google, we have Microsoft, we have Meta. Then Thursday, we have Amazon, we have Coinbase. That's going to be an interesting one too in the cryptocurrency space. Comcast, Roku, ExxonMobil is going to announce on Friday. Chicago Board Option Exchange is going to announce on Friday, or now known as the SIBO. Just made it short. Yeah, that's it. November 7th expiration. Yeah, that's correct. November 7th. That's the expiration. So in other words, with the Visa trade, I don't mind doing this and giving ourselves a little bit of room to run. You could, Kurt, you could come out and just do the 3-day trade, but I kind of like giving it a little bit more time. Time is money, and we're down on that position a little bit. We could look at the October 4th. Let's see how much. Vol's probably up. It'll probably be fairly close in cost. October 31. I like the 7th. That's going to be the official paper trade, but let's look at the 31st. Same expirations. Then this is all going to be about earnings. Yeah, it's 348. So it's not that much more. And I kind of expected that because the front month, well, here's the difference in vol, just looking right here. The implied vol is 40 here and the implied vol is 30 here. So a big difference in implied vol from the very front month to the back month. And that implied volatility makes that front month cheaper to put the butterfly on. Remember, the higher the volatility, the cheaper the butterflies are going to be. And if you're correct on your forecast, you want vols to come down or you want, i.e., time decay to happen on your at-the-money option contracts. So both of them are trading for about the same cost, a little bit less on the November 7th expiration, but it's just all about getting the timing right. All right, everyone, that's it. 11:23 officially. Thank you for stopping in. We'll be here for Wednesday for the next edition of Options Guide TV, see how the Visa trade works out. And we will look at a new trade in Alphabet, in Meta, Microsoft. Will look at a new trade in a few of these Mag 7 stocks that are going to be announcing. Don't forget to tune in. See you this Wednesday, 11 a.m. Eastern Time, inside hub.tradier.com, inside the Tradier inside the Tradier Hub platform. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.